have, right? So if you have, if the bank risk appetite, it's quite high, then how are you looking at the kind of customers you have, the risk grades of your customers that you actually serving, and the kind of the margin above the hurdle rate that the bank has to ensure that you're meeting that expectation. The other aspect of it is that, are you creating economic value as a bank in terms of your employee incentives? Under the operational cost, it involves costs like remuneration, depreciation, and many other lending costs, right? So are you creating any employee incentives that are aligned to your economic value creation, having taken care of risk? And lastly, are you charging the right costs to the risks that the customers are bringing to the bank from a perspective of lending, right? So as a business, are you able to actually ensure that, based on your customer profiles, are you pricing your facilities? And pricing of facilities based on customer is one of the things that banks are currently looking at, even from a digital perspective, looking at unsecured lending and so many other things that the bank is looking at in terms of ensuring that you price risk as expected. And actually, even the frameworks that are set in place, including the Kesonia, giving you the K factor, which is actually embracing the risk aspect. The customer profile K factor is actually incorporated in the K factor. Moving on to the next slide.
And
the
Eric,
next slide
sorry, Eric, just to interrupt you. Thank you. You are proceeding well. And to the participants, my apologies. I've just seen the comment that the slides were not viewable. I believe now that's been fixed. So Eric, just to take note, if you might want just a recap of the first slide that had the formula. I believe the participants were not able to view that. So just a quick recap of that, maybe as you move on. Yes, that one. Okay.
Okay. Apologies for that. So I would want you to go back to the framework. So as I was speaking to the framework, what I want you to pick out today is that the RAROC is supposed to be meant for looking at profitability of facilities issued at customer level, right? And you're looking at the total return. Total return basically is the interest that is being charged to the customer. This interest that is being charged to the customer, it's based on your pricing framework, whether you're implementing risk-based pricing or whether you're implementing another model in terms of your pricing. This is now what feeds into your total return. I mentioned, even in the current happenings within perhaps the Kenyan space, we have Kesonia that is being implemented within the next 3 months, or actually it's actually a few days into it. So you'll find that with the Kesonia perspective, when you actually building the scorecard within the next 3 months, and you'll be able now to implement that in the remaining 3 months, having taken care of specific customer risk, you'll be able to come up with this total return aspect. Number 2, you less the expected credit loss, which is a cost to what, or it's a net, it's a net to what return you'll make from this particular facility. Number 3, you should supposed to adjust for funds transfer pricing, and as I defined, the funds transfer pricing is around the perspective of the transfers between deposit taking branches and lending branches, and this is perhaps mostly managed by the treasury function, where they are able to redistribute the deposits to the lending branches and the deposit mobilization branches. And finally, the operational cost, which covers a lot of things, right? And I mentioned around operational cost covering, different aspects of operational lending cost, depreciation, and so on. Now, this is divided by your allocated capital. Allocated capital for regions, and I know Ethiopia, perhaps you're embracing, the minimum capital around 8%, Basel minimum, and so on. So within the allocated capital, again, this is just to ensure that you tie down the return, risk, and capital, and also look at what is the portion remaining for the shareholders' return, right? So the output of the RAROC number is compared to a hurdle rate, which is the shareholders' return. So at any point when you're issuing a customer facility, and it's below the shareholder return, just you'll actually be able to, once you have adjusted risk, this facility is loss making to the bank, right? Or this particular facility being loss making to the bank. If it is above, it is profit making. So you are able to reflect on at origination, you are able to see profitable facilities or not profitable facilities, and what can management do to ensure that all the customer facilities remain profitable after adjusting for risks and capital that has been set aside. So ideally, that's what we wanted, to bring out clearly that it's a profit capital shareholder conversation around, is it the business profitable and is it growing? Now, I'll skip to the next slide just to also give you a perspective in a moment around the 6 areas I mentioned that should actually help you to discuss around the strategic value. And these 6 questions you need to ask yourself as a bank, whether the business or the product is enhancing shareholders' value, whether you're able to embrace or considering day-to-day activities and business decisions, that are made on day-to-day basis, whether risks are taken care of. Because then again, it actually feeds into the deductions, the costs that are going to reduce the total return aspect of it. And, looking at events that could negatively affect your operating and financial performance, whether you're actually able to increase your risk quantum as a bank, based on your risk, updated risk appetite, and the other aspect of whether the facilities or customers are able to create value. Customer facilities are able to create value. The other aspect is whether you're pricing risk correctly. Moving on to the next slide. That's just a recap of what I was discussing. So this is the last slide that I am presenting, and this is around the East Africa RAROC experience. And within Kenya, some banks, especially Tier 1, have embraced RAROC in terms of looking at your risk-based pricing, feeding into the total return component, and also looking at performance from a dashboard perspective at customer level, right? Are facilities remaining profitable or not? The other aspect is that also Uganda is looking at this, profiling the RAROC frameworks, especially for corporate lending portfolios, in such a manner that you'll be able, for corporates, if you are able to rate your corporate customers, you're able to now compute the RAROC bit of it, and you can actually see whether you are making profit on the same. Tanzania, it's an emerging conversation, but largely the focus is on portfolio level analysis, noting that for you to be able to implement RAROC, you actually need to have certain steps, including ensuring that you rate your customers, because RAROC is customer specific, right? And you need to ensure that you take the credit risk profile of the customers into this particular perspective. Rwanda, it's having early discussions or early exploration that are supposed to be, implementing or important to the bank. So it hasn't really been implemented, but it's a conversation that it's happening. Ethiopia, knowing that it's still implementing Basel 1 and perhaps looking into implementing Basel 2 and 3 as well. RAROC is still a conversation that is on the early stages. But to note is that as KPMG, we have built a RAROC model for a top bank in Ethiopia that now helps to be able to look at the profitability of their corporate book, right? So it's a conversation that banks, from a strategic perspective, should be able to advance even without that regulatory influence, because then it actually helps even in your ICAP process in terms of looking at your capital. I want to pause there, but before I pause there, maybe just to highlight 3 challenges that banks have experienced in computing the RAROC. And one of the challenges is around being able to incorporate FTP costs. You really need to have a model or a way of accounting for your FTP cost that should go into the RAROC. So then banks that are behind in computing that will not be able to account for that particular cost. Number 2, you need to ensure that, perhaps some of the other aspect is that lack of rating of customers, right? So if you're not able to rate your customers, you're not able to look at the specific credit risk, exposure to that particular customer when it comes to computing profitability of the facility. So rating of customers is important so that you're able to incorporate that in the ECL component of the RAROC tool. And finally, the skills gap, being able to understand and having teams within the bank that are able to understand RAROC and implement and be able to implement at origination, because that is very, very key. And also, when you're doing your analysis for facilities before disbursement and issuing of facilities, and looking at it retrospectively within your portfolio, just to understand whether your portfolio is loss-making or not. Let me pause there and hand it over to Amitava to take it up from here and give us the solution bit. Over to you, Amitava.
No, thank you. Thank you, Eric. Thank you, Daniel. So good morning to all of you. Would just like to continue the discussion which Eric left. So basically, I'll just take you through a little bit of a high-level view of RAROC, continuation of what Eric mentioned. And thereafter, I'll get into that solution demo so that I can explain to you typically how banks are actually implementing RAROC and how they are able to derive certain key decisions from the RAROC measure. So the next slide, please. So, as Eric had mentioned that, it's very important to have a more profitable business so that your business is more resilient and it can go through the ups and downs of various macroeconomic factors. What we have seen globally as well as in multiple jurisdictions in Africa is RAROC is an important part of to enhance the business strategy, because what RAROC essentially does is it tells the business that what are the products, what are the solutions, what are the services of the bank which are profitable for the bank, and hence banks tend to focus more on those profitable segments of the portfolio. So whether be it a secured portfolio or unsecured, within secured it is the loan against property, mortgage loan. So what type of portfolio the bank is based has a strength in it, and hence the bank would like to focus more on capital getting allocated to those portfolios so that they are able to enhance or maximize their portfolio. So business strategy plays a very important role in terms of helping what the future RAROC would be. The second is RW computation. All of us currently are constrained by capital. Banks globally, we have seen that, collateral capital is a major constraint. And hence it is important to understand that if I have to do my RW calculation using certain collateral mitigation approach, what are the areas in which RAROC can be applied? Hence, those are the aspects where I can minimize or reduce my RWA. The third is around trade-off between capital consumption and return. Traditionally, what we have seen is bank had been calculating or investors are evaluating their investments in various banking entities by using measures like ROA and ROE, return on assets and return on equity. But the point is in both this definition, the component is risk is missing. A bank may have a high ROA, but it is also coming with a high risk. But there is no way to evaluate risk. Even if you go to ROE, which is return on equity, it's just a financial measure where there is no element of risk embedded within the ratio. And hence, RAROC plays a very important role because RAROC is risk adjusted return on capital. We have to adjust for risk for two reasons. Currently, in the world of Basel, every bank will have to have a minimum amount of capital maintained. So that is one part of the risk, which is your unpredictable risk. The second part is your provision. As and when we now have IFRS 9 regulation in place for every exposure we take, be it 1, 2, or 3, we have to have a provision created. And hence, there is a risk element. So what RAROC does is it includes the risk measures in a return. And hence it gives you a composite way as to how you want to do a trade-off between capital consumption versus capital return. And the last part is, an active trading strategy. Basically, this is for the Treasury Department, where they may have investments in various types of derivatives or equity investment, commodity investments. So that is RAROC is also used by the Treasury team to evaluate which revenue stream is more profitable for them at what level of risk which they are taking. So that's the summary of the slide. Maybe the next slide. Yeah, so of course, how do we use RAROC? There are multiple ways which we have used RAROC and which we are going to demonstrate to you in next 5-7 minutes. Basically, the first and foremost, RAROC is used at the time when you are approving a particular loan application or a credit facility application. How does it do is basically, for example, let's assume that I have $100 with me. Now I have got two proposals coming to me, proposal A and proposal B. So I now need to identify that where will I allocate this $100? Should I go for proposal A, which is already, it's a good customer, or proposal B, which is also a good customer? So what RAROC does is basically it also tries to identify that fair enough, the return can be there, but are the risk embedded in these two customers are same. So hence what RAROC does is basically I'm trying to see that given that a certain amount of return, what is the risk which I'm running? If the risk is lower in client A, then I will tend to give my $100 to client A. So it helps you to do a estimation of risk adjusted return on capital at the time when you are sanctioning a credit facility or a loan application. Second is maintaining customer data. Customer data is actually fetched automatically from the backend of the system. The way which we have worked with our clients is we help them to create a data mart. The data mart will have all the customer level information. Once on the front end, you put the particular information for that particular loan application. The customer information is fetched automatically from the data mart and the RAROC gets computed on the face of the screen. Third is post-disbursement RAROC. So what we have seen again, when the relationship manager will source a particular credit application because he has to meet his business targets, he will typically tend to give very positive responses about the customer that, look, the customer is going to give me around 15% RAROC, 18% RAROC. But many a times which we have seen that after a loan is disbursed, many of these credit facilities are not utilized by our clients. And if they don't utilize our facilities, for example, it's a working capital facility or any facility where there are drawdowns, which they have to draw down a certain amount. If they're not using the facility, we are giving them the facility for which we are maintaining capital, we are maintaining provisions, but what we are not getting commensurate interest return on that because they are not drawing their facilities. So it's very important to understand at the time of sanctioning, what is the RAROC which I had promised to the bank vis-a-vis post-sanction, maybe after 3 months, 6 months, 1 year, what has been the actual return from that particular account. And then I can compare and discuss with the RM that, look, you promised such and such return, but my return from this particular account is less. So there are multiple ways we can do that, and I'll explain it to you in the solution. Of course, the solution comes with a very detailed model documentation. It is not a black box. Each and every formula, each and every step is explained in the document so that any novice can pick up the document and understand how the system is working. The system also provides user access management. That means that, from the front end of the system, you can provide different types of user access rights to different users. And lastly, there are a lot of dashboards, trend analysis, comparison. All these things are done in the face of the system so that you can evaluate and take a correct strategic decision about your bank as well as the customer. Next slide. What are the core capabilities which we are trying to derive from this automation? The automation can be done on an Excel sheet or any other platform, but this current platform which we are trying to provide to our clients, you can see that the interface of the solution is very intuitive. Typically, any person who understands banking, understands process, understands RAROC can just log into the system and use it. It is very easy to understand. There is no detailed training which is required. It just follows step-by-step process, you give the right inputs and you get the output. And it's very intuitive in nature. So the change management process is very much less when a client is actually using the system. We typically use a centralized architecture. That means that basically we are hosting this platform on a web browser. So anybody who has access to intranet within the bank can use it. Using your Windows username password. There is no separate requirement of installing any additional applications, programs, and all those stuff. So nothing you have to do. Just you have to go to your web browser, which is within your bank, and just use it. It's as easy as that. The third part is everything, whatever calculations happen within the system, there's an audit trail available in terms of like who logged in at what time, what did he add, what did he delete, all those things. Everything is now created within the system so that you are able to see what changes have been done at the back end of the system. Flexible data integration, I will show it to you that, we can link this particular solution to your various source systems, like your core banking solution or LOS, LMS, so that at least data comes automatically from those systems into this particular system for quick calculation. The other option, which is also available for our clients, is basically you can upload an Excel sheet where all the data is provided, and from that data, the system will cull it out and do the calculation. So both manual upload of data versus automated upload of data can be enabled within the system. It's a scalable infrastructure because we have used this for some of the very, very large banks. One of the bank in India which is using it has got 55 branches. The credit lendings are being sourced from various branches because there are retail banking operations, there are corporate centers. So many different branches are actually using it, and hence it has been used for multiple purposes. And lastly, access control. Again, access control is provided at the front end of the system. Different types of access can be provided so that different users can use it for their own particular purposes. Yeah, we'll go to the next slide. The core benefits. So again, some of the benefits I just wanted to highlight that first and foremost, it is built on Python and Angular interface, and I'll explain it to you. I'll show it to you. The reason why which we are using Python and Angular is basically these are open source libraries. Hence, you don't have to pay any additional amount for using these applications. So there's no additional amount which is required. Secondly, it enables pre-sanctioned RAROC as well as interest rate threshold settings can be provided as an input to the system. It integrates your internal rating systems, any LGD, EAD which is coming. You can use it based on your standardized capital. You can use it based on your advanced approach capital, like an IRB capital. It can handle large volumes of data because it's built on Python. So any sort of statistical calculations, any volume of data, it can run on it very quickly. It offers dashboards and audit trails. So, decisions can be taken quickly based on what you are able to see based on the last run of RAROC. And of course, after the installation, if we are always available, there's a AMC which we sign with our client. Any bugs, any issues which are facing in the system, we are always there to support you in those requirements. Yeah, next slide. Maybe I'll just take access to the screen and I'll just show the solution demo right now.
Maybe Amitava, as you take to the screen, I do see quite a number of questions. Maybe as you change over, the first question here is, and I do believe that perhaps Eric did speak to it. What are the practical challenges of computing the allocated capital and recommended approach for a bank with subsidiaries in different phases of Basel adoption? That's one of the questions. If you have anything to add, perhaps would be good to add. I see here from Eric, FTP at a global level has a nil impact since it is a pricing allocation tool across the business units in an organization. So why include it in RAROC? Again, you could perhaps comment on that. And the final comment from Samuel here is, are the tools for ICAP, ILAP, and RAROC separate applications, or are they within the same suite? So perhaps as you transition, you could see which one you could answer. Thank you.
Daniel, should I take or Eric will be taking? I was not sure.
Eric, you could take the first two, and then Amitava, you could take the last one about the suits.
Sure, sure.
Okay, Daniel, I believe the first one was on capital computation, economic capital computation or capital allocation. So, ideally, the aspect of it is looking at allocated capital or economic capital, that is employed capital. So, allocated capital you can actually embrace if the regulator has not provided for the minimum, including the buffer. You can actually embrace the Basel minimum of 8%, but actually you need to take off from the perspective of what the regulator requires from your region. If it is 14.5% with the buffer, then you take that as the allocated capital and incorporate in the RAROC formula. The other question was around FTP. So the other one was around FTP, and there's a comment around being a nil number, looking because it's internal. You look at it from a perspective that it's a cost from the lending, branches, right, and being managed within the treasury function. The reason you're looking at it because it's something, as much as it's considered as a cost that should be paid to there, even though it is sitting within the same, the bank and the same P&L book, it's considered as a cost that should be factored in, because from a lending perspective, it's something that should be paid to the deposit mobilizing entity or branches. And again, as part of the cost that should go into the RAROC, in practice, that is one of the things that should be considered, even though at the very end, when you're doing the computations as a bank, you'll actually look at it all together, either from the deposit taking and the treasury and also the lending perspective. But from a RAROC perspective, you need to incorporate it just to ensure that even from the facility perspective, that you're actually also considering that charge that will go into your the treasury account that handles the pooled funds. I believe I've answered that question, unless Amitava has anything else to add, and then you can take up that question.
Fair point, Eric. Completely aligned with you.
I think, so Amitava, over to you. There is the last question there that
yes.
I believe you can answer that as you transition to the next.
Yes. Yes, Daniel, I can explain the last answer. I can show it on the system. Just one question which I can see from Samuel Ombati. Basically, are the tools of ICAP, ILAP, and RAROC separate applications? So the answer currently is no, these are all part of one application. That's the benefit which we currently have for our clients, that you upload the data once and the data goes into various systems and solutions and does the calculation based on the purpose. However, we can also create separate systems out of it because it's a system developed in-house by KPMG. It depends upon the client requirements. If you want one integrated system, we provide you with one integrated system. If you want to do a cherry pick and choose which one you want out of, you don't want ICAP, you just want ILAP, or you just want our RAROC, we can also do the same based on your requirement. So it's that. Maybe I'll just now get into the demo and then we can come back and respond to the other questions. Yeah. If you can confirm if you can see my screen.
Yes, it's visible.
Okay, cool. Thank you. So as I mentioned, it is basically a web-based solution. The only thing which you require is to have a web browser, which be it any web browser, Internet Explorer, Google Chrome, it'll run on it. It is cloud compatible. So if you want, it can be made compatible to your cloud platform, whatsoever it is. The solution will be implemented onto your bank's premises, bank server. So KPMG or any other third party will not not have access to the internal data of the bank. Hence, your data will remain safe and secure. And as I mentioned, because it's a web browser, anybody can use it based on its role within the organization. On the left-hand side, you can see the core modules of the solution. The first is dashboard. That means that based on the latest runs of RAROC, whichever you have done, the dashboard will get created. These dashboards can be customized for different types of levels of people within the bank. For example, if I'm a corporate banking head, I just want to look at the RAROC measures related to corporate banking, I can do so. If I'm a retail banking head, I'm more interested only in retail banking, I can do so. And if you're a CEO, you want to see at an enterprise level, that's also possible. So different levels of dashboards can be created for different user rights. Here in front of you, you can see the one sample dashboard which we have done an implementation for one of our clients. You can see for a corporate portfolio, what is my total exposure, what is my total income, how much capital I'm getting consumed, and then finally, what is my RAROC in this case. So similarly, I have for retail and similarly, I have for SME. Going back to Eric's point, if you want to run a very profitable portfolio within the bank and you want to allocate capital, then retail is a segment as per the current dashboard where more amount of capital needs to be allocated, so that because you're making more profit for every unit of capital you are paying. So that's how you can interpret the RAROC measure. Similarly, there are certain hurdle rates where you can mention what is the minimum expected return of your stakeholders or your investors, and vis-a-vis your expectation, what is the actual return which you are earning for different types of portfolios. You can see various graphs and charts in terms of how exposures are there for various types of portfolio. What is the income which you are getting, how much capital is getting consumed. So all these things are very much customizable. We can create these types of different dashboards, visualizations, screens for you, so that you can spend more time in analyzing and taking corrective action rather than working on the simple data around it. Then we come to the RAROC configuration screen. Basically, here I'm trying to configure various inputs which is required into the system. For example, what is my target capital adequacy ratio? What is my current capital adequacy ratio? What are the total loan exposures I have in loans and advances? What is the total capital? How much capital is invested? Net income, total debt, total equity, RWA, risk-weighted assets, profit before tax, profit after tax, as well as your weighted average capital. So you provide all your inputs out here, whatever you want to do. And based on that, you save your screen and all the calculations will thereafter happen based on these inputs. The second part is you can input your risk-weighted assets calculation for various portfolios like the credit risk, operational risk, and market risk, and any other risk which you want to incur. Now, there are various types of practices which are available in the market because there's no definitive regulatory guidelines. So we have seen that some banks focus mostly on credit risk, and in the denominator, they don't take operational risk charge and market risk charge. Vis-a-vis, there are certain banks who tend to take credit risk, operational risk, as well as market risk as a denominator, while in some cases, banks do consider pillar 2 risk also in the denominator. So it depends from bank to bank, how do they perceive risk and how do they perceive income. Based on that, they will do this. Now, there was a question one gentleman had asked in the chat that how operational risk is allocated. The way which we typically do is your RAROC measure will increase based on your total amount of exposure amount as well as your total risk. So here, since the risk is operational risk, what we typically do is we take the total operational risk charge and then we allocate it to each and every facility based on the exposure amount. So either it can be the total loan or it can be the EAD earnings exposure at default, or it can be the total loan which the client has accepted for. So we allocate operational risk based on the loan amount, and accordingly we compute the RAROC for that particular customer. So this is just one way. Of course, it's a sort of approximate way. There's no scientific way because operational risk charge is calculated in a very different way. There is no direct link, but there can be multiple ways of doing it. This is just one way to allocate operational risk to a particular customer. Then you include your customer ID. What are the various customer IDs? And if the customer belongs to any large diversified group, you can do so. Why so? Because what the solution does is it calculates RAROC at the most granular level. It calculates for each and every credit facility. So be it a overdraft or a term loan or a bank guarantee, it will calculate at that level. The reason is that it will thereafter show the various portfolio cuts from the base minimum level to the enterprise level. What are those? Basically, you can see that which type of facility is profitable to the bank. Are term loans profitable or overdrafts are profitable? Similarly, which branch is profitable to me? Is branch A more profitable or branch B more profitable? RAROC is also used sometimes for evaluation of the performance evaluation of the business team. So relationship manager 1 is making more profitable deals for me, or relationship manager 2 is getting more profitable deals for me. So it can be used in multiple manner. Which product is profitable, which portfolio is profitable, which city or region is profitable. You can create multiple cuts only and if you have the most granular level of calculation. So that's why we always insist that we should have RAROC calculated at the most granular level. So we include all the clients and diversified groups out here. Then we come to expenses. Now, the income basically from each and every customer can be calculated accurately from your core banking solution or the interest rate which you propose to charge to the customer. So that is not a challenge. The challenge in RAROC calculation, and I think there was a question on that also, the challenge in RAROC calculation is allocation of expenses. Now, what we typically do is we do our expenses are allocated to direct cost and indirect cost. Indirect cost is all head office cost, management costs which are involved. Direct costs are the costs which I'm incurring at a branch to source this particular deal or to get this particular loan. So electricity, branch premises, rentals, machineries which I'm using, so all those costs. So basically what we do for our clients is we go to the GL level cost, we identify all the cost levels, then we allocate the cost to various credit facility based on certain rationale. We again discuss the rationale with our client, we explain them all the options available, pros and cons for each and every rationale, and jointly we and the client we jointly agree that which rationale we are going to adopt. Once that rationale is adopted, we use that particular details in allocating my cost to various credit facilities which I have given to a customer or I propose to give to a customer. So that's how this particular expense module typically works. Once that is done, I go to my pre-sanction. Pre-sanction means when a proposal has come to me, a credit application has come to me for evaluation. So at that point of time, I go to the various details. For example, what is my risk-free rate at that point of time? What is the provision of standard assets, which I have been told by the regulator to maintain? What is the minimum regulatory capital adequacy ratio? What are the hurdle rates? And what are the actual and specific provision? Now, there are two aspects to this. Either these inputs can be a fixed component, provided by the finance team, somebody from the back end, so that no relationship manager can able to change it. Or we can instruct the relationship manager that, look, when it comes to risk-free rate, please check with me. I will check what is today's risk-free rate and I will tell you to update. So all these things are then updated into the chart based on the current relevant data points available. Then we come to applicant information. Here we can search customer. As I mentioned, if it is an existing customer, we can provide the customer ID, and the customer ID will recall all the information about the customer from my local database. And if we have not done the connections, then of course, a lot of these data will have to be provided from the front end of the system. So I can include a customer. I can say what type of customer it is, a wholesale or a retail, applicant's name, what is the current status, is it active or inactive customer, and what is the credit risk currently borrowed cost. Then we come to the other inputs. For example, from which city he belongs to, which branch ID he belongs to, what is the name of the relationship manager. So these are all inputs which we are asking for this particular credit loan application, so that we are able to create RAROC at various cuts. So I can create a RAROC from city, I can create a RAROC from branch, I can create a RAROC from zonal ID or industry also. So that's how we create this RAROC. After this, we go into credit facility. So there can be one credit facility applied for, or there can be multiple facilities. So I select what type of facility is asking. Maybe the first one is for derivatives, the second one is working capital, third one is term loans. What interest rate you are proposing to charge, what is the FTP rate which is applicable, what are the various limits, what is the average expected utilization of this customer, is he going to utilize 100% or is going to use 50%, a reasonable approximate which the relationship manager has to provide. Then is it a fund-based exposure, what is the eligible Basel collateral, in case it's an IRB, then is whatever collateral is eligible, you can include that so that it is excluded in the overall exposure, and expected fee income, and then maximum tenor of the loan. So based on these various inputs, you can calculate RAROC, and then you can see that for this particular customer, what had been the RAROC. So it gives you the numerator, it gives you the denominator, and based on that, it will tell you the RAROC. More importantly, it will also it will compare with the hurdle rate, and it will tell you whether it is above the hurdle rate or below the hurdle rate. Importantly, what happens is you can also download this as a PDF file, because once you're submitting to a credit committee, you have to then ensure that the credit committee is appraised of all the relevant facts. So you can print the file, you can save the file, you can download the PDF file so that you're able to put it to the right person in the right manner. So this is where the pre-sanction RAROC has been created. So pre-sanction means the loan application has now come for approval or rejection. Once I have approved the loan and I have created a limit into the system in my core banking solution, and the amount gets disbursed, it then goes to the next step, which is your post-disbursement monitoring. In post-disbursement monitoring, now it gets calculated, the RAROC is calculated on an entire set of customers. It is not on an individual basis, but for entire set of customers. So I select the date on which I want to run the calculation. I add the hurdle rate, which I minimum expect, my capital charge, any upper bound or lower bound of the RAROC number you can do. You can upload the data, or the data can come automatically from your core banking solution for all the existing set of customers where you have given a limit, where they are utilizing the limit. So that may come automatically, or I can upload an Excel sheet. Once I upload the Excel sheet and I do submit, and my entire RAROC gets calculated for each and every customer. Once it gets calculated in the customer, I can see the results. I can download the results, or I can view the results, and all the dashboards which I had explained to you in the first, everything gets updated automatically, that this is what my total RAROC as per the new composition looks like. So here I can download the report. We'll just give it a minute for it to get downloaded. And then you can see the report in this section. Yeah. So here you can see the entire RAROC gets calculated, and similar to IFRS 9 system, which I explained to you yesterday, the RAROC output just doesn't give the RAROC output, but it also gives you each and every components which goes into the numerator and denominator of calculating the RAROC. So there is complete transparency, accountability of the numbers which is getting created, so that if anybody asks you, how did you arrive at 5%, how did you arrive at 10%, you can show him each and every steps which gets included to compute the final RAROC. So the output gives you a complete details as to how the RAROC got calculated. And you can always download this on an Excel sheet or a CSV format and then use it for your internal analysis also. So that's okay. So, and then as I mentioned, the user access management and other modules will be applicable however you want. You can provide unlimited number of user access rights from the front end of the system. There's no dependency on KPMG, and any sort of other calculations which you want to do in the system that can also be customized within the system. So that's the overall look of the solution, which we have implemented with multiple client sites. Maybe we can bring back the presentation deck.
Thank you very much, Mitaba, for that demo. And we will continue before even we go to the Q&A. First of all, we will look for the questions that have been answered, and maybe if there is an open question, I'd just like to address. There's a question that has been asked based on Eric's feedback. Is the capital, is it the case that allocated capital is the same as economic capital? And if not, which one is more appropriate and why? And as I make comment on this particular question, I want to combine it still with the question that had been asked, that what are the practical challenges of computing the allocated capital, and what are possibly the recommended approach for a bank with subsidiaries in different phases of Basel adoption. This is a very key question, because when you're talking about the allocated capital, remember, under Basel 1, that is under Pillar 1, we're talking about the regulatory required capital, that is capital charge for credit, market, and even operational risk. That is the allocated capital that you will be able to use and find out what is exposure. And when you're talking about RAROC, we are looking at that particular capital that has been provided by shareholders, and we are finding out, and we want to evaluate what capacity is it able to absorb losses. And in this particular aspect is that you find that the banks that are under Pillar 2, they are developing ICAP, and they are developing and saying that other than the capital that has been required by the regulator, we are also including other capital to allocate to Pillar 2 risks. So the economic capital is that particular capital that is over and above what is required by the regulator. And therefore, when you're looking at what then capital is allocated, you'll find that as a business, when you're making the decisions, like for example, when you're going to be computing in the Kesonia framework, under the component K, when you're going to be looking what is the cost of equity, we will be taking the economic capital and distributing and allocating to very specific areas that we want to find out. If I'm lending to the corporate book, to the corporate customers, if I'm lending to the digital customers, what is that particular exposure in that particular aspect? So you'll find that allocated capital, you add it all together from all those particular sections will equal to your economic capital. But then the question comes, then what is the challenge? Towards that those institutions that are different stages of Basel. If you're in Basel 1, remember what, if you're in Basel 1, remember what you are allocating is only what has been defined, possibly under credit risk. If you're coming now to Basel 2, it is to what extent are you good in terms of assessing the risk profile of the customer that you are lending. So if you're lending to a riskier customer, then it means that you are allocating more capital to that particular customer. And so this particular discussion, especially for institutions in Kenya, when you're going to be coming up with your component K under the cost of equity, in that particular computation, then the question you'll be asking yourself, is my cost of equity less or more than the return than the RAROC? And therefore, the answer goes there. You'll be able to know how you're pricing the various loans into various portfolios. I don't know, there is another question here. The tool seems to be only covering lending products, pre and post disbursement. What about RAROC calculations for other non-lending products? Mitava, you'll be able to take that one. And then there's another question from Beatrice Mwiriki, says that, I'm curious how the model is calibrated for long tenure facilities, considering input and expectations, and expectation may change over time. Back to you, Amitava. Please take those two questions.
Sure. I couldn't get the first question, Daniel. Where was it? Okay. Okay, the tool seems to be only covering lending products, pre and post. What about RAROC question for other non-lending? Yeah, answer is yes. So typically what happens is bank tends to spend a lot of capital. If you see the credit risk capital, risk-weighted assets typically is around 80-85% on an average. And most of this capital is coming from the lending portfolio. Hence, we've seen that banks typically they focus on lending portfolios, hence they want RAROC to be calculated for lending portfolio. But yes, I do understand your point where you're coming from. There are few of our clients who have requested that they want to extend to non-lending products also. That is typically on the deposit side. They want to include that also in RAROC calculation. Some clients have even requested for including treasury also as a part of their RAROC calculation. So that is also possible. So it depends as to from bank to bank where they are focusing and how they are evaluating various product suite within the organization. The second one was, I'm curious how the model is calibrated for long tenure facilities, considering inputs and expectations may change over time. Brilliant question, very practical one. That's true. What we have seen, is that RAROC calculation typically in banks are being done on a quarterly basis because they want to continuously evaluate which product, which portfolio, which account is profitable to them and which are not. And then accordingly, they take corrective action so that they are, as an enterprise level, they are running a more resilient business. So for a long tenure products, facilities, typically, every quarter, the outputs are coming and accordingly the bank will take a corrective action as to whether they would want to continue with those types of facilities, whether they want to do a margin call on those facilities, whether they have a chance or opportunity to make any amendments in the facilities in terms of interest rate, processing fee, collection fee, any other things. So in summary, my answer would be that yes, since banks are calculating on a monthly basis, quarterly basis, even for a long tenure facilities, outputs are continuously coming to them, and they, based on the outputs, they can take corrective actions for those types of facilities. How do we cater to ancillary income? So typically, if the ancillary income is related to any particular borrower, it will get added to your numerator. Your RAROC will actually increase because you're adding ancillary income. Or if it is not related to any particular borrower, then typically we don't consider that into RAROC calculation because in RAROC, we are only comparing whether borrower A is more profitable, account A is more profitable than account B. Daniel, is that okay?
Yeah, thank you. Thank you very much, Mitava. And I can see from the chat, you have answered actually during the last comment, the question from Henry Tosi. So I will go to the next slide. And if you're still there and there is a question that you can still post, you can still post it in the chat and you'll be able to answer it. Next slide, please. Eric, next slide. Yeah, the question then we are asking is that from the metrics to meaningful, and Amitava, you'd want to go to the last slide. I don't know whether it is visible to our viewers and to our participants, and make a comment from the RAROC insight and what is the call to action and what are we expected to do from here. Amitava.
Sure, definitely. Thank you, Daniel. So can we have it in the presentation mode, slide 19? Can you put it on our presentation mode? Yeah. Or maybe you can just zoom it in a little bit more in this manner so that we can see. Fair point. I'll just continue. So basically, just to summarize the overall RAROC things, first of all, it is a performance measurement tool, performance of products, performance of credit facilities, performance of relationship managers, performance of business heads to understand who is doing more better business than others. So that is point number one. And it also gives you a composite measure of return versus risk, which is a very important criteria in today's context, because in all exposures, we are actually taking a capital hit and we are taking a provision requirement. So essentially, because of Basel and IFRS 9, we definitely have to include risk as a measure in our evaluation tool. Then there's the pricing and transaction. RAROC output can be used to identify what type of pricing we need to do, what type of transactions are profitable to us, how much pricing, how much risk we need to transfer to our customers, how much risk we are okay to consider in our book, and that risk is commensurate with your risk appetite or not. So that is the next point. And the third point, which is very important, is portfolio optimization. When I say portfolio optimization, banks constantly have to focus around where they want to focus, where it's capital intensive, where it is capital light, how do I optimize my capital, what type of capital I have to use for my risk-weighted assets. So there are so many questions the bank will have to answer on a continuous basis to its investors, to its depositors, to the regulators. Hence, RAROC plays a very important role in allocation of capital, your current allocation versus the future allocation, as well as portfolio optimization, to understand that you only focus on those portfolios, those products which are more profitable for the bank. So these are the three most important application area for RAROC in multiple banks, which we have seen. Maybe back to you, Bernard. Good to see you. Yeah, maybe you can take up.
Thank you very much, Chava, for that conclusion. It has been a very engaging session, and there's somebody who has asked whether we are going to share these particular slides. Yes, we will be reaching out to you and even giving you more materials in this particular area, even for more of your reference. And from the particular series that we have had since Monday, we discussed on IFRS 9 automation on Monday. We discussed on ICAP and ILAP on Tuesday. Then today we have discussed on RAROC. And today we are asking ourselves that if IFRS 9 and ICAP and ILAP gives us the nexus between the risk management and the strategy, then RAROC is asking us that where we are putting our money, is it worth it? And as we are going with this particular series, tomorrow we are going to be having 2 sessions where we'll be talking about lending modernization. And this is actually very timely within the East African region, especially where you are having the regulators requesting institutions to be customer-centric in terms of how they are doing their lending business. And then we are asking ourselves, how then is it possible for us to be able to come up with a risk profile, not at the portfolio level or the collective assessment, at how is it possible for banks to leverage on the kind of the data set that they are having, the system they are having, the knowledge of their business, to be able to come up with the risk profile at the customer level. At what point in time do we say that when the credit analysts are in the branches, can they be able to collect that particular data and assist the institution to make the decision in terms of the credit scoring of a customer, whether they are digital loans and all those particular perspectives. The early warning signals, those are the discussions that you're going to further tomorrow, even as we are wrapping this particular series of these webinars. And in the call, we are having our partner in charge of that is business consulting services, that is FCP Bernard Amuka. He will be making his remarks. And there is a poll that we are going to request our participants to be able to give the attention to. It's going to be coming in the screen, and that is before the call ends. So I take this opportunity to invite Bernard. Bernard, if you can hear me?
Yes, I can hear you very well. Can you hear me?
Yes, loud and clear. Please proceed.
All right. Thank you very, very much, Daniel. Thank you, our participants, for joining the call. Today, our focus has been on risk-adjusted return on capital. And as banks, we thank you for spending time to listen to the presenters. Eric has taken us through the overview of RAROC, where he has defined what it means. He's set out very clearly the purpose and why RAROC matters to all of us. And as bankers, this is critical, and you'll agree with me that the framework that he has laid out, the formula, is very clear. And what remains top of mind is how then do we turn risk into reward? And as Amitava mentioned, you want to look at the profitability of the corporate clients, the profitability of retail clients, and have a very good trade-off on the business side on what you run. So the experience that we've shown on what is happening on the East Africa side, based on our interaction with the clients, has been quite insightful. Now, looking at how we can optimize and maximize on portfolio return, now calls us to having a very clear automation or tools that can help interact, use data, make, monetize the data aspect. So the tool precision has been represented by Amitava, and you've looked at the core capabilities of the solution and the features in terms of looking at its intuitive nature. It's very flexible, and you can integrate it with your system. You can use it in your central architecture, and a very scalable infrastructure. So for me, participants, we are very, very happy that you have joined, and we'd like to keep the conversation going. Please reach out to us. We are a team that is ready to serve you, and we would not like to see any of our customers, potential and existing, struggling with automation or given the heightened regulation that is taking place today. It is our desire that you find this useful, and looking forward to more interactions with you. And thank you so much for joining. To Amitava, we are very grateful for your time you are putting in as a partner and strengthening this across the continent. We are very grateful, and we look forward to you supporting more the work we are doing here. As you've done in the UK, you've done very, very well there. So thank you very much. To Daniel and the team, thank you very much for what you've done. So we going to just take that quick poll. It's only 3 questions. Our participants, if you could just quickly take that poll as you exit. But thank you very much. Do have a very, very blessed day ahead. Asanteni sana. Daniel, back to you, just in case of anything. Thank you.
Thank you, Bernard. And can see people, they're answering, they are attending to the questions. Please, before you log out, kindly make sure you leave your comment there, leave your views there. And even as you retreat to go and apply what you have discussed today, even as you continue preparing for the transition fully into the Kesonia framework, we wish you well in terms of how you're coming up with the RAROC and comparing with the cost of equity. Let us keep this particular discussion where you can be able to support, reach to us out. And thank you very much, even for your active participation. And wishing you a wonderful day ahead. And please do not sign off without finishing the poll. It gives us more feedback in terms of what then can we be able to engage you next. It also gives Amitava and the other panelists in this particular call in terms of how they can be able to reach out to you and even be able to give you more support in this area. Thank you very much, everyone. And And thank you so much, even for your support all through. I wish you a wonderful day ahead, and be blessed. And see you tomorrow as we discuss on the lending modernization and the early warning systems. Thank you very much, everybody. You have a lovely day.
Thank you, all of you. Thank you.